The airline industry. It's a sector I've historically avoided like the plague. Low margins, brutal competition, and a history of destroying shareholder value. So, why on earth am I dedicating an entire video to a company at the heart of it? Because what if I told you there is a company that benefits from the explosive growth in air travel without the direct risks of the airlines themselves? A company with a guaranteed order backlog of over a decade, effectively making its revenue predictable for years to come. This company is not an airline, it's the undisputed leader in a global duopoly, and its main competitor is facing significant challenge. Is this the perfect storm for a once in a generation investment opportunity? In this video, we are diving deep into Airbus to see if this is the ultimate long-term buy. Stick around because the findings might surprise you. So, what makes Airbus so special? First, let's talk about their business. They are the titan of the aerospace industry, designing, manufacturing, and selling commercial aircraft, helicopters, and defense and space products. But the crown jewel is their commercial aircraft division. And this is where their first major competitive advantage comes into play. Their colossal backlog. Airbus has orders for over 8,000 aircraft, which at current production rate will take them more than 12 years to deliver. This gives them incredible revenue, visibility and stability, something almost unheard in other industries. Secondly, the commercial aircraft market is a duopoly dominated by Airbus and Boeing. This creates a massive barrier to entry for any new competitors. And right now, with Boeing facing a series of production and safety issues, Airbus is in a stronger position than ever to solidify their leadership for the next decade. This isn't just having a rival, it's about being the clear front runner in a two-horse race. Airbus is a company with a market cap of 132 billion euros and is trading at a forward P of 24. It looks high when you compare to other opportunities we have been analyzing in this channel, but bear in mind Airbus is a leader of this market. They are inside the duopoly with their competition having difficulties. They have plenty of infrastructure, know-how, and that has to be valued in somehow. So it's normal to have higher Ps when you analyze companies like Airbus. When you look into our money journey checklist, there are two axes, but this doesn't mean this is a bad company. On the other hand, I think Airbus is an incredible company, and that's normal. There are companies, in this case, Airbus does not have the highest margins. Their gross margins are only 15%, and net margins of the last 10 years has been around 6%, which is bad when you compare to other industrial companies, for example. But they are a leader right now. Boeing, when it was profitable, they have net margins around 9%, which is better than Airbus. But Airbus is getting more and more profitable as it takes on. And with this market leading position, this backlog, I expect Airbus to expand their margins. Probably we see a 8% net margin. At least it's my thesis, and it will be very good, but still a low margin business. They've been growing very good, 8.5% per year in the last 5 years. So that's been very good. They are inside a very good trend of the air travel industry that is been growing very good. Demand for traveling has been increasing, and I expect them to be a secular bull trend. And then they have been gaining market share from Boeing, which is very good, and that's what we like to see, to a company to have better growth and taking market share from competition. That's something always good and very important to look in terms of that. That's exceptional. Boeing is net debt positive. They have 13.7 billion euros in cash and short-term investment, and their long-term debt it's only 11.2 billion euros. So industrials usually are very leveraged. They have to buy and invest a lot in infrastructure and invest in their manufacturing process. But Airbus has a very healthy balance sheet. So good news for Airbus. In terms of returns, very good returns on equity and on investment. Returns on equity has been around 22, and return on invested capital in average of the last 5 years has been 14.4%, which is very good, especially for a company with this low margin. So it is a company I like to see them investing in their business, and they have to invest. They have to increase their manufacturing capacities, but they have an incredible high backlog, which is good news. But it's very difficult for them to increase their manufacturing process because they are limited on their engines. For example, they can produce as many planes as they get engines. That's their bottleneck at the moment, and they buy them from a client from other company, and they are limited right now because of that. But if they can get more engines, they could build more planes, so it will be good news for Airbus in the next few years. But right now it's the bottleneck in their manufacturing process. Moat and competitive advantage. They have plenty of competitive advantage. They are in a duopoly with Boeing, and Boeing is getting bad, a lot of problems. Of course, if you want to buy a Boeing or Airbus, right now you'll prefer to go to Airbus, but their backlog it's enormous. So if you want to make an order from Airbus, you'll get your plane at to 2037, 38. So that's why some clients still go to Boeing, for example. And competition, they are in a duopoly. It's high barriers to entry in this industry. We see competition from small companies like Embraer or Comac from China. I don't see them to win a lot of market share because regulations, it's very difficult to enter this market, especially for Comac. Everyone is talking about Comac from China, but I don't see European airlines buying Comac planes. At least Airbus win this war for the next decade. So right now, in terms of R&D, designing new products, we are talking about products that will come in 2035 maybe. Boeing already said that they will not launch new planes in the next decade. So the next decade has won by Airbus, but still they will be buying from Boeing. What we'll talk here, it's the decade after 2035, for example. So that's very good news for Airbus. Demand until the next for the next decade is here. They will increase their revenue for sure. It is a very certain revenue, like a subscription business, you can call it. At least it has to get valued like that. And they could increase their margins, get better in their manufacturing process. So plenty to invest on, and very healthy balance sheet. In terms of having free cash flow positive, except for 2020, which was a bad year, of course. And if you compare the stock of Airbus, it's up 20% since its highs of 2020. And Airbus is stronger than ever before, so that might scream opportunity right now. It's a very good fundamental company. Revenues going up, net income. If they can expand margin, continue to grow, I think net income per share, for example, will grow faster than their revenues. Gross margins steadily, they can recover to 18% maybe. Return on invested capital above 10%. Shares outstanding very stable, but their free cash flow per share has not increased in the last 4 years. So my thesis here is during the next decade their revenue will grow and their free cash flow per share will grow even faster. So I'm expecting them, they have everything in place, and if they can end their bottleneck on the engines, for example, they can build more planes, and then that could be very good news and take the stock up very fast. But and they have been returning capital, don't forget about that. They are paying a small dividend around 1.2%, and at this valuation, which looks not expensive, especially if you know this is a duopoly between Boeing and Airbus is a leader. This is a very good company, so they might do some buybacks and they could create a lot of shareholder value, but who knows if they can continue to grow very fast and free cash flow per share accelerate, and if they start a buyback, this stock could be 50% higher really fast. But is this company undervalued or overvalued? Let's do our valuation analysis. So it is a French company, not a French, it's a European or a merge between some companies in Europe, but I use France as reference. In terms of risk, business risk, this is very safe. Of course, this backlog gives a lot of safetiness and flexibility for Airbus. In terms of industrial, it's always very difficult because you are selling planes for the you are selling planes for 12 years ahead. So if there is a lot of inflation, tariffs for example, that will take a hit on their margins and could be a problem for the profits of Airbus in the future. But that's the risk, I would say. But revenues are very safe, so that's a good point for Airbus and something you should take it. So for me, for investing in this company, for my base case, I will use a discount of 10%. I'm good with 10% returns. So my base case, I'm expecting margin to improve. I will not expect Boeing margins and Boeing net margin of 9%. They are 6%. They can improve that around 7.5. It's my base case. In terms of, they are expected to grow this year 8% and 12% in 2026. So I will expect them to grow around 10% in the next 5 years and 6% in the 5th to the 10th year. So I think I'm being conservative right here with this travel demand. With if they increase the build of planes, if they can build more planes per year, this revenue can grow even faster, in my opinion. In terms of PE, a leader in the market, very safe stock. It will be very safe for the next few years. iVaries 20. Of course, they deserve a premium, so I'm assuming from my base case a 20 PE. And with these assumptions, I came with an intrinsic value of $141 right now. Dollar, not euros, because Airbus is trading at the Paris stock exchange, so the ticker is AIR. Right now it's trading at a price of 167.5 euros. So my fair value is around 141, but a company like Airbus, it's incredible. High fundamental score, iBaris 20, that has one of the biggest moats in the in this business, I would say, both from an industrial business and for planes. I would say the biggest manufacturer. It will getting bigger than Boeing probably, and they are diversified. They are in defense, for example, and they are a big player as well. And with this increased demand on defense, they will benefit as well. So right now it will be very difficult. So I'm very interested in buying Airbus. I don't have it in my portfolio, but it looks at above the fair value. I would say for me, I would be getting interest around the 140 euros. So is Airbus the perfect opportunity to invest in the growing trend of air travel? Let's recap. We have a company that is the clear leader in its sector, a position that has only been strengthened by its competitor recent struggles. Their incredible backlog of over 12 years makes Airbus one of the safest bets for predictable future revenue. This isn't speculation, it's based on confirmed orders. Arguably, Airbus is in the best strategic position it has been in since its creation. And when we look at the valuation, it appears fair for such a high quality business with this long-term tailwind. While no investment is without risk, the case for Airbus as a core long-term holding is incredibly compelling. What are your thoughts on Airbus? Let me know in the comments below. And if you found this analysis helpful, don't forget to hit the like button and subscribe to the channel for more deep dives into the best investment opportunities in the stock market. Thanks for watching, and I'll see you in the next one. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.